What are tax havens, and how do they affect the economy? Lately, tax havens have been at the center of many controversies, with scandals involving the rich and powerful from all over the world. But what exactly are they? Are they just places with lower taxes, or is there something more to it? If you want to understand how they work and why they affect everyone, even those who aren't wealthy, stick around. Today we're going to break down what a tax haven is, how it operates, and why they are such a controversial topic. What is a tax haven? A tax haven is a country or territory where taxes are extremely low or even non-existent, attracting large fortunes and companies looking to save huge amounts of money. While in countries like Spain, the tax on corporate profits is 25% and personal income tax can reach 47%. In some tax havens, it barely reaches 1 or 2%. Examples of tax havens: Cayman Islands, Bermuda, Panama, Luxembourg. Although some European countries like Switzerland also have similar practices, each list of tax havens may vary depending on the organization that creates it. 4 key factors to identify a tax haven. Low or no taxes. Countries that offer exaggerated tax advantages to attract foreign capital. Lack of transparency. Laws that allow keeping the financial information of companies and individuals secret. No information exchange. Difficulty for other countries to investigate who benefits from these low taxes. Benefits for non-residents. Companies or people who do not carry out economic activity in the country can still take advantage of its tax advantages. How do tax havens work? The key is in offshore companies, also known as shell or front companies. These companies only exist on paper. They have no employees, offices, or produce anything tangible. They are used to open bank accounts and hide money confidentially. The procedure: a businessman, politician, or celebrity, let's call him Mr. X, creates an offshore company in a tax haven. He uses a frontman, someone who puts their name as a facade, so as not to officially appear as the owner. If he wants more anonymity, he can create a network of companies in different tax havens, making it almost impossible to trace. Problem: although this practice is not always illegal, it is morally questionable. Tax evasion: not declaring this income is a crime. Money laundering: criminals also use these companies to hide money obtained from illegal activities. Impact on large companies: multinationals also take advantage of tax havens, and they do it in a more complex but equally effective way. These companies transfer their intangible assets, patents, formulas, algorithms, to an offshore company. Then, subsidiaries in countries with normal taxes must pay royalties to use those assets, thus transferring the profits to the tax haven. Result: profits remain in countries with low taxes, while in the countries where they actually operate, they declare less income and pay less taxes. Why don't all countries lower their taxes? It's simple. Taxes finance public services such as education, healthcare, defense, infrastructure. Larger and more developed countries have higher expenses, which makes it unsustainable to reduce taxes to the level of tax havens. Conclusion: tax havens pose a global dilemma. They allow the rich and powerful to avoid contributing to the common good. They harm ordinary citizens who do not have access to these systems and must cover the deficit with their own taxes. Now that you understand how tax havens work, do you think they should be regulated more strictly? Is it possible to find a balance between attracting capital and ensuring tax justice? Let me know your thoughts in the comments. If you liked this video, don't forget to like and subscribe for more interesting content. See you in the next one.